Okay, hello and welcome everyone. So happy Thursday. So thank you for taking time out of your day to attend the latest Vincent's tax update. My name is Hayden Jones and I'm a manager in the business advisory division at Vincent's, and I will be taking you through today's tax update. Just a bit of housekeeping before I begin. So if you do have any questions during the presentation, please feel free to pop those into the chat. Alternatively, if you do want to contact me directly at the end of the presentation, then you can do so using my contact details on the screen at the moment. We'll see how we go for time. I have got a bit of content to get through today, so I'll do my best to answer any questions at the end, but as I said, feel free to contact me afterwards if you do have some questions. Okay, so there's just a fun disclaimer there, so I'll go to the next slide. All right, so in today's session, we'll be focusing solely on fringe benefits tax. As I'm sure you all know, the 2022 FBT year came to a close on the 31st of March, and as such, the very exciting FBT season has already begun. Now, I'm sure some of you probably cringe when you hear the words fringe benefits tax. And let me assure you that you're not alone. It's certainly an area that many employers, and dare I say it, possibly even some tax practitioners tend to try and ignore until the annual FBT lodgement due date arises. So like many tax issues, FBT is an area that can be quite complex and onerous. And so it does require some forward planning and preparation. So to assist you guys with getting into the FBT season, today we are going to be running through a bit of an FBT refresher on some of the most common fringe benefits provided by employers, as well as looking at some recent FBT developments and updates. And finally, we'll be touching on some of the current ATO focus areas in terms of audit and review activity. So quite a bit of content to get through, so we will carry on and push through. So just to begin with, before I get into the refresher, we're just going to have a quick catch up on the lodgement and due dates. So for anyone that's not aware, effective from the 2021 FBT year onwards, the ATO have permanently changed the balancing payment due date to 25 June. Now that term balancing payment just means that if you're an employer who's paid instalments during the year, for example, then any balance of FBT that is due on lodgement of your FBT return is not due until the 25th of June. So this change in the due date is to align the payment due date with the lodgement due date, and it's available to employers that lodge electronically through their tax agent. So in terms of getting access to this new lodgement and payment due date, you need to be registered with a tax agent by the 21st of May this year in order to access the concessional due date for your 2022 FBT return. So if you aren't lodging through a tax agent, then the payment and due date will remain at the 21st of May 2022. And this year, both the 25th of June and the 21st of May fall on a Saturday. So the effective due dates will actually be the following Monday. So for May lodgers, that'll be the 23rd of May. And if you're a June lodger, it'll be the 27th of June. And just a quick reminder as well, excuse me, employers are required to lodge an FBT return if they have paid FBT instalments during the year. So that's similar to if you think of an individual who's paid income tax instalments or had tax withheld from their wages. Equally, if you've got an FBT liability, you also need to lodge an FBT return. And if you're registered for FBT, then either you need to lodge an FBT return or notify the ATO that you don't need to lodge an FBT return for the year. Okay, so just another update as well on rates and thresholds. So the only change to note here is the statutory benchmark interest rate. So for the 2022 FBT year, the rate is 4.52%, which is down from 4.8% in the 2021 FBT year. And just a reminder while we're on this slide that with reportable fringe benefits, there are some benefits that are specifically not reportable when it comes to employee income statements, and that is meal entertainment that hasn't been provided under a salary packaging arrangement, car parking, and exempt fringe benefits such as minor benefits. All right, so let's get into the technical. So firstly, what is FBT? So if we go back a step and think about what is a fringe benefit, essentially it's a benefit that's been provided by an employer to an employee or an associate of the employee in respect of their employment, or essentially as a result of their employment relationship with the employer. So in effect, it's a but-for test. If the employee would not have received the benefit if they weren't an employee, then you have a clear FBT benefit or issue. If they would have still received the benefit if they weren't an employee, then potentially you have other areas of tax law that you need to consider, such as Division 7A. So just to reiterate that, if the employee wouldn't have received the benefit if they weren't an employee, then you do have FBT. If they would have received the benefit regardless of that employee-employer relationship, then not FBT, but potentially still other tax considerations such as Division 7A. So I've just got a couple of examples there of fringe benefits. So first one there, payment of an employee's gym membership, pretty straightforward. That's generally private in nature, so it's going to be FBTable. Providing the employee with a car, which is extremely common fringe benefit. Reimbursing an employee for their dinner at a restaurant. Or this last one, giving an employee tickets to go and see the cricket. So as fringe benefits are essentially a form of remuneration, and they're provided to employees on top of their ordinary salary and wages, these benefits are effectively untaxed in the hands of the employee. So to combat this untaxed remuneration, the FBT legislation operates to ensure that tax revenue is collected on fringe benefits provided to employees. However, there are certain FBT considerations and concessions that may ultimately allow the employer to reduce the FBT liability to nil, and we will touch on some of these later in the webinar. Okay, so in terms of a bit of an overview as to the process of dealing with FBT, at a very high level, there's a few sort of steps to go through. So the first is whether or not a benefit has been provided. Secondly, was the benefit provided in respect of employment? What's the type of benefit, which we will go through some of those a little bit later, but essentially it could have meal entertainment or expense payment, property benefits, residual, etc. Once you've determined the type of benefit, is there any specific reductions, exemptions, or concessions available to allow you to reduce your fringe benefits tax liability and possibly get a complete exemption? Then you need to calculate the taxable value, and that again comes back to the specific type of benefit that's been provided and the relevant valuation rules that then apply to that type of benefit. Next, you need to gross up the taxable value, and this will depend on excuse me, whether the employer is able to claim GST or not on the benefit provided. So you've got type 1 and type 2. Next, you then calculate the FBT liability and allow for any FBT installments paid during the year. And then, of course, you need to prepare and lodge the FBT return so the ATO is actually aware of what you've provided and what your liability is. And lastly, you also need to determine any reportable fringe benefits that need to be included on your employee income statements. And as I mentioned at the beginning, there are some benefits that are excluded, so just keep a lookout for that. So types of fringe benefits, there is quite a number of them, but for today's purposes, we're only going to be looking at the first three, so meal entertainment, car fringe benefits, and car parking fringe benefits, as these are the most common ones that employers and accountants alike will come across. So when dealing with fringe benefits, it is important to correctly identify the type of fringe benefit that has been provided, because there are different rules that apply depending on the type of the benefit. Specifically, the type of benefit determines the valuation methods that are available, and it will also determine whether there are any specific reductions or concessions that can be applied, as I mentioned previously. Okay, so the big one, meal entertainment. So the first thing we're going to talk about is entertainment as a whole, not just meal entertainment. So the first fringe benefit for today arises when an employee or their associate are provided with entertainment in the form of food, drink, or recreation. It also includes accommodation or travel provided in connection with or for the purpose of facilitating entertainment by way of food, drink, or recreation. Quite a mouthful. So, for example, if an employer located in Brisbane held their Christmas party at a restaurant on the Gold Coast and provided employees with hotel accommodation for them to stay at after the party, then the accommodation would be treated as entertainment for FBT purposes. This is because the Christmas party constitutes entertainment in the first instance, and the accommodation was clearly provided to the employees to enable them to attend the Christmas party. So there's a direct connection there. So as you can see from this definition, it's intended to be quite broad so as to capture virtually any situation where food, drink, or recreation has been provided, with limited exceptions. However, it's worth noting that not all food and drink and recreation will be entertainment, and so you do need to do a bit of a careful analysis of the facts in each situation to determine whether or not you have actually provided entertainment, rather than a worst case scenario of assuming that everything's automatically caught. So one of the issues that many employers really seem to struggle with is to accept that entertainment can arise irrespective of whether or not business transactions occurred or business was genuinely discussed at the same time that the entertainment arose, or the employee was actively promoting or advertising their business. And you can understand, because employers do obviously spend a lot of money in this space, and so you can understand that for them, they view it as it's a cost of business, why shouldn't they get a deduction? So if we take the example of a business meeting held over a lunch at a restaurant, the fact that all attendees genuinely discussed business and or perhaps a business deal occurred at the lunch doesn't mean that entertainment has not arisen. And for those of you dealing with FBT clients, I'm sure you've all had at least one client that's called you up and tried to argue that having a business lunch at restaurants should be FBT exempt, or perhaps they've even tried to argue that entertainment benefits provided to employees are an unavoidable cost of competition specific to their particular industry. And on this basis, then they should be entitled to an FBT exemption. And like I said, you can sort of see an argument for it, but unfortunately, FBT legislation doesn't agree, and it doesn't provide for an automatic exemption simply because there is an element of business inherent in the provision of entertainment, and sometimes it can be quite hard for employers to accept this. So when it comes to classifying and valuing entertainment benefits, there is effectively three categories. So meal entertainment, as I mentioned, and it's the primary one we'll be talking about today, recreation, and entertainment facility leasing expenses, which is sort of the pop phrase, I guess, for that one is FLE. But as I said, for today, we're only going to be looking at meal entertainment because that's really the most common category of entertainment that you'll come across in practice, whether you're an employer or an accountant. Okay, so as the name suggests, meal entertainment is entertainment provided in the form of food and drink, and it also, as I touched on earlier, includes accommodation and travel in connection with providing the food or drink. So by definition, this is an extremely common benefit, and as such, it's really important that employers understand their exposure to FBT in this regard, and that they implement appropriate procedures in order to identify and track when entertainment benefits have been provided, which really, I mean, it does take away the entertainment side of things pretty quickly when you've got to track these things. So to assist employers with determining whether the provision of food or drink is meal entertainment, the ATO have provided a bit of a list of questions to help navigate through the minefield. So these questions, I've got those on the screen just there. So why is the food or drink being provided? What type of food or drink is being provided? When is the food or drink provided? And where is the food or drink provided? So in terms of the weight given to each of these questions, the ATO have confirmed that essentially the first two questions are the most important, so the why and the what. But even so, they have also said that you shouldn't rely on one question in isolation as a single determining factor. You need to consider all the facts and circumstances and essentially look at the detail. So So some examples of meal entertainment. So I've got there meals at a restaurant for the purpose of business networking. So I think that's probably a pretty straightforward one, unfortunately. If you think about most networking events you go to, they're usually at a really lovely venue. There's usually some pretty impressive nibblies, there's drinks. It's supposed to encourage a bit of entertainment to get people into the networking spirit. If you've got a business lunch or dinner at a restaurant, unfortunately, that's generally going to be entertainment. Food or drink at social functions. So if you've got a Friday night drinks at your business premises, that potentially will get an FBT liability for you. But we'll touch on that a little bit later in terms of the valuation methods that may produce a better outcome. And food or drink at a social function, so at external venues, that's definitely going to be meal entertainment. And food or drink consumed at a corporate event. So I used the example before of going to a cricket match. So there's always going to be food and drink at those, particularly the latter, lots of drinks. So I guess then just quickly by contrast, some examples of food or drink that wouldn't be classified as meal entertainment include your tea and coffee that you get in the office. If you think about that in a quite literal sense, it's not for entertainment. You're at work, maybe it's to keep your employees focused, not sure. And also light refreshments, so sandwiches, fruit, etc., consumed on your employer's premises whilst you're working overtime or say during a lunchtime training session. So definitely no entertainment to be had there. So that's pretty straightforward. So just quickly as a reminder, a common mistake that I see a lot of employers make is that they think that, okay, I've got food and drink, it doesn't qualify as an entertainment and therefore it's exempt and they don't have to look any further. But that's not actually correct. So just because you may have provided food and drink and related benefits and they don't constitute meal entertainment, it doesn't mean that you haven't provided another category of fringe benefits, such as a residual or a property benefit. So what I'm getting at is meal entertainment is your first port of call. If it's not meal entertainment, then you need to move on and consider if you've got any other fringe benefit categories that may apply. Okay, so going to the valuation methods that are available. Essentially, there's three methods. In practice, you don't see the bottom method there, the 12-week register method. It does get used, but it's very rare, so I'm not going to cover on that one today. I'm just going to talk about the actual and the 50-50. So firstly, with the actual method, as the name implies, it's based on actual facts and records. So who attended, what was the cost, was there food and drink, etc. It's quite literally a logbook and detailed register of what happened and when and where. Critical detail with this one is you need to be able to identify which employees have received the benefit. So it's not, there's no shortcuts essentially with this method. You've got to be focused on the detail. So for a small employer, this might not be a bad option because ultimately the actual method does allow you to access certain concessions. So I've got there, for example, the minor benefits exemption. So just a reminder for everyone, that's where you've got minor and infrequent benefits that are provided on a irregular basis. You've also got the otherwise deductible rule. So that's a question of whether or not the employee, if they had paid for the meal entertainment or food and drink, if they would have been entitled to a once-only deduction had they paid for it and claimed it in their tax return. And if the question says, if the answer is yes, then otherwise deductible rule applies and there's no FBT. And so essentially with the actual method, you get to do a detailed review of all the entertainment or potential entertainment that's been provided for the year and clearly identify which is going to be taxable and which may be potentially exempt. Having said that, it's quite an onerous method, particularly for employers with a significant number of employees and meal entertainment transactions. So it's definitely not one for everyone. It's not a one size fits all. Another point to note, I guess, as well, is that there can be some significant savings here if you are able to apply what's called the Section 41 property exemption. So I sort of briefly touched on this before. So if you've got Friday night drinks in the office, it may be that you can get an exemption there for those, even though it is meal entertainment under the actual method. Moving on to the 50-50 method. So this is the shortcut method, essentially. you must elect to use this because the actual method is the default method. And essentially under this method, the employer is allowed to treat 50% of all meal entertainment as being non-taxable. So it doesn't matter if you've provided 100% taxable or ordinarily taxable meal entertainment. This 50-50 method is a straightforward, down the middle, 50% is taxable, 50% is not. So in this scenario, the employer ultimately may pay FBT on what would otherwise be non-taxable entertainment. So going back to the actual method there, you're able to access the minor benefits and otherwise deductible rules, but the 50-50 method is already a concessional valuation approach. So you don't get to also then access additional concessions on top of this method. And a final point to note here as well is that classification is really important because with entertainment, as many of you may be aware, when you get to the income tax side of things, entertainment's not generally tax deductible unless you've paid FBT. So if we pick the 50-50 method, for example, if you've spent $100 on meal entertainment for the year, $50 of that will be taxable for FBT purposes, therefore you'll get a deduction for $50. The other $50 will be non-deductible. So you need to understand how much of your meal entertainment has been provided during the year, how much you've paid FBT on, because it has a flow-through consequence for income tax, and it also has a flow-through consequence for GST purposes. Okay, car fringe benefits. So car fringe benefits arise when a car is held by an employer and is made available for private use by an employee or an associate of the employee. So I'll just sort of put in bold there the two critical elements of that definition. So firstly, is there a car? So the definition of a car for FBT purposes is actually taken from income tax legislation, and it's defined as a motor vehicle except a motorcycle or similar vehicle designed to carry a load of less than 1 ton and fewer than 9 passengers. So as such, there's some vehicles that don't satisfy this definition, so they can't be classified as cars for FBT purposes, and they may instead give rise to a residual benefit. So just because it's not a car doesn't mean that you're in the clear. There may still be a fringe benefit, and generally it will be a residual fringe benefit. So some quick examples of that is certain single cab and dual cab utes may not actually satisfy the definition of a car, and therefore they're treated as non-cars, or they're commonly actually referred to workhorse vehicles. And if these vehicles are used in an exempt manner, which is essentially a requirement that any private use is minor and infrequent and irregular, and there are some additional conditions and details there, but if you satisfy the fact that the car is used in an exempt manner and private use is minimal, then you may get a full exemption for that vehicle. Okay, so the second component that I want to focus on with the definition of a car fringe benefit is whether or not the car is held. And what that really boils down to is whether or not the car is owned or leased by the employer. So the car must be held by the employer, who is essentially the provider of the fringe benefit. And as I said, the employer must either own or lease or otherwise make the car available to the employee under an arrangement between the employer and potentially a third party. So if you think of a novated lease arrangement. And then thirdly, they haven't made this bold in the slide here, but there's also the private use component, because at the end of the day, a car fringe benefit, what we're really concerned about is, has a private benefit been obtained? So has the car got deemed or actual private use? So practically most cars will have some kind of private use. So there will be either deemed or actual private use. And this is because, you get given a car, you take it home every day, you park it in your garage, and you've got access to it 24/7. There's no, periods of unavailability in practice. However, some employers definitely do try to reduce their FBT liability for car fringe benefits by putting in really strict rules. So they might have gone through the first few steps and said, yep, we've definitely got a car fringe benefit that we're providing, but how can we reduce that? And what they might actually do is they might put a policy in place where the car is only available to the employee during the week, so they can drive it to and from work, use it for work-related purposes, etc. But on the weekend, oddly enough, they might have to return the car on a Friday evening to the employer, leave the keys at the employer's business address, and then they don't have access to it over the weekend. So obviously there's a bit of effort required there and also a bit of inconvenience, but I have heard stories and seen cases where employers will do that to try and reduce the period that the car is deemed to be available for private use. Okay, so I've covered those couple of things. All right, so valuation methods. So we've got the statutory formula method and the operating cost method. So as with other types of fringe benefits, whenever you hear statutory formula, that's generally the default method. And this is absolutely the most common method that employers will use. So the sort of recent stats on this is about 70% of car fringe benefits are calculated using the statutory formula method. So by and large, this is, represents a huge portion of the car fringe benefits that are being provided. So under this method, you're essentially assuming that there's been a 20% private use of the vehicle, which if the car is actually used for more than 20% private use, then potentially this method will give you a benefit. And just as a further point to note there, that with this method, you do get a 3/4 reduction in the base value, sorry, I should say 1/3 reduction in the base value of the car after 4 full FBT years have elapsed. Now, the operating cost method, as I said there, you've got to elect to use it, and it's essentially a logbook. So you need to have the employee prepare a logbook for 12 weeks, and it must be representative of their actual, sort of genuine use of the vehicle. It can't be a period where maybe they're doing a lot of work-related travel, and they might then decide, I'm going to, do logbook during this period because I'll get a higher business or work-related usage, and the private percentage then will be very low. So the ATO says, no, it needs to be a genuine logbook. You also need to keep records of all the running costs, which for most employers is, if you've got an accounting software package you're using and you're getting regular records and potentially even paying for the running costs directly, you should have those records anyway. But there are certainly situations where you do have to go back to the employee and get those records from them. So again, there can be a bit of back and forth and administration sort of issues with that. And this method also has a deemed depreciation and deemed interest component. So you get to factor in all your running expenses plus a deemed depreciation amount under this formula and a deemed interest component. So as I said, if you've got really low private use, then potentially the operating cost method will produce the better outcome. But ultimately, it's up to the employer to choose whichever method produces the lowest taxable value. And it doesn't matter if you've used the statutory formula for a vehicle last year, you don't have to use it again this year. You can pick and choose year on year, provided, of course, that if you're going with the operating cost method, you have the substantiation and the required records to use that method. And also, if you've got multiple cars that you're providing to a number of different employees, you don't have to use the same method for each car. You can do stat method for one car, and then the next car you can use your operating cost method if you want, again, if you've got the substantiation and required records. Okay, car parking fringe benefits. So this one has quite a few conditions you need to satisfy before you've actually provided a car parking fringe benefit. And I guess with this one, the interesting point to note is that you have to satisfy all of the conditions in order for a car parking fringe benefit to arise. It's not a one, if you tick one box, then you've got an FBT problem. So I've just got there a bit of a definition. So on a particular day, a car parking facility has been provided by an employer to an employee or associate, and a car, remember that definition of a car that we spoke about earlier, is parked on the business premises or associated premises of the provider, being the employer generally, that is located within a 1 kilometre radius of a commercial parking station. So just quickly, the various conditions to consider is that the car is actually parked at the business location or an associated premises. It needs to have been parked for more than 4 hours between 7 a.m. and 7 p.m. any day of the week. The car must be owned, leased, or otherwise under the control of the employee or provided by the employer. It's provided in respect of that employee-employer relationship. It's parked at or near the primary place of employment on that day, which for some employees does change. But I will be talking about that briefly a little bit later on in terms of updates in the FBT world. And lastly, there needs to be a commercial parking station that charges a fee for all-day parking within that 1 kilometre radius of the premises in which the car is parked. And a commercial parking station in that 1 kilometre radius needs to charge more than the FBT car parking threshold for the 2022 year, that's $9.25. And there also needs to be the same requirement needs to be passed at the beginning of the FBT year. So there needs to be a commercial parking station that's charging a fee for all day parking for more than $9.25 on the first day of the FBT year. So as I mentioned before, if you don't pass all of those conditions, then you haven't provided a car parking fringe benefit. And, oops, sorry, I've just jumped ahead. And just briefly as well, I'm not going to go into all the details, but for many of you, you may be aware that small business entities do have an additional potential exemption from car parking fringe benefits. So just be aware of that if you do have any small business entities or you are a small business employer. Okay, so valuation methods. There's quite a few of them. So again, in practice, a lot of clients tend to go for the commercial parking station method because it's the default. The other one that seems to be quite popular is the average cost method, and it can produce a pretty good outcome. But as I've noted, they do need to keep records. But I'm not going to go through these in detail today. Just be aware that there are a few different valuation methods, and they each have their own sort of quirks in terms of how you determine what your actual taxable value is for car parking purposes. Okay, here is the next little update in terms of your brief FBT refresher, your crash course. So I just want to talk about the arranger provisions. So I'm not sure if everyone has heard of these before, but you're probably, even if you're not familiar with the term, you're probably maybe peripherally aware of this issue. So the arranger provisions are actually included in fringe benefits tax legislation, but they're often overlooked by employers and possibly even tax agents when it comes to determining FBT exposure and potential FBT liabilities. And this is partly due to a lack of awareness of these provisions, but it's more commonly due to the incorrect assumption that it's really only the employer that can be liable for FBT when the employer did not provide the underlying benefit. So essentially, that if somebody else provided a benefit to your employees, that because you didn't provide it, you don't need to pay the FBT. So from the ATO's perspective, the issue with these benefits being overlooked is, of course, that it directly reduces the amount of FBT revenue collected by the ATO, because in many instances, neither the employer nor the client or supplier is actually reporting and paying tax on these benefits. So it just doesn't get captured at all. So what are they? Broadly, the arranger provisions treat an employer as being liable for FBT where an employee has received a benefit from an associate of the employer, or possibly even from a third party, such as a client or a supplier. So where such benefits arise, the ATO regards the employer as having effectively arranged the provision of the benefit to their employees. The benefits can be any type of fringe benefit, but in practice, it's most often entertainment, and the recipients also tend to generally be more senior staff. It's not very common that you'll have this issue, at the more junior level of your staff. Okay, so I've just got a couple of examples here in terms of potential arranger provision scenarios that may pose a risk for the employer. So again, typically the most common scenario is where a client or a supplier takes an employee of the employer out to lunch or dinner at a restaurant for free. So again, maybe it's networking, maybe it's to build business relationships, etc. And probably the last one is where the client or supplier provides an employee with free or discounted goods and services. So that's probably a big one, especially at certain times of the year. Okay, so following on from these examples, the next question is, when do these benefits arise under the arranger provisions? So in the past, the ATO's position has actually been really quite aggressive. And essentially what they argued was that any benefit provided by a third party to an employee was regarded as a potential fringe benefit liability for the employer, even if the employer had no idea that it had happened. So clearly this created, a lot of administration nightmares for employers, and it also exposed them to a risk of unintentional non-compliance with FBT. And it's a bit of a minefield, really. So in recent years, the ATO have actually relaxed this position and said that, well, if an employer only has a mere awareness of the fringe benefits, then that's probably going to be insufficient to create a potential liability for the employer. So what they're now saying is that the employer must have some kind of involvement in the provision of the benefits. And involvement sort of can look like a few different things, but generally there must be a level of participation, facilitation, or promotion by the employer. So I've just got a couple of examples here as to what may potentially constitute those three, catchphrases: so participation, promotion, and facilitation. But as always, you really do need to consider the specific circumstances to figure out whether, you can tick one of these off and say, yes, we've got an arranger provision in place. So just as a quick example, if we just look at promotion, for example, so the employer might have, the employer or the client supplier might have actively promoted access to the fringe benefits to the employees. So maybe there was an informal internal email advising of the possibility of getting, discounted goods or whatever, and it wasn't, available to the general public. It was because the employer and the third party made an arrangement for this to be provided to the staff. So I guess one of the biggest challenges with the arranger provisions is the administrative burden for the employer, particularly when it comes to valuing the benefits provided by a third party. And as you can imagine, it's pretty awkward to go and have to ask your client or your suppliers for details of exactly how much they've spent and what they've given your employees. And so, naturally, I think employers would shy away from this even if they were aware of this issue. So how do we manage it? So the burden can be managed by enforcing a policy whereby employees are not allowed to accept or receive benefits from third parties. It's a pretty hardline approach, but maybe it has a place in some industries or for some employers. As an alternative, the employer can manage their FBT exposure by setting up a formal internal policy to record benefits and establish a communication channel with a third party so that benefits can be valued and tracked. So that's probably the happy balance between the two. Again, I know there is a sort of a human element to that and managing relationships. But I guess what I'm getting at is to be aware of this issue and, maybe there is a way to get it out in the open and to manage it by setting up those policies and procedures. Okay, so moving on now to some updates and changes. The first of these is around travel and meals and accommodation. Sorry, I've gone too far. So with borders reopening and travel, I guess, once again becoming a part of business, it's really important that employers are correctly classifying whether or not employees are traveling on work, living away from home, or have actually relocated for work. So there's a new tax ruling, 2021/4, and it deals with the distinction between those three categories, so traveling on work, living away from home, or relocating for work. And this distinction is actually really quite important because depending on the type of travel that's been undertaken, you may have a different FBT outcome. So as a general rule, when an employee is traveling on work, meal and accommodation benefits will likely be FBT exempt because of the otherwise deductible rule. So just as a reminder with that rule, essentially it asks the question, would the employee be entitled to a once-only deduction personally if they had paid for those costs themselves? And if the answer is yes, then you have an otherwise deductible rule that you can rely on. You may actually need to get, I guess, a declaration from the employee, though, to confirm that. And then if you've got a living away from home or relocating for work scenario, then you've most likely got an FBT liability. There's slightly different, I guess, potential concessions or reductions in those two scenarios. But the most common the one that you want to really try and satisfy is the traveling on work category. So with this new ruling, the ATO has basically said, okay, well, we want to help employers with determining whether or not an employee is actually traveling on work. And so in this new ruling, they've provided a bit of a rule of thumb approach, and it essentially explains that an employee can be regarded as traveling overnight on work when they satisfy a number of requirements. So I've got a very summarized version there, but essentially the employer provides an allowance or pays or reimburses the accommodation and meal expenses for the employee. The provision of the benefit is not part of a salary packaging arrangement, and it's also not part of a FIFO or DIDO working basis, so fly in, fly out, or drive in, drive out basis. The employee is away from their normal residence for work purposes for a period of time, and generally that period of time can be no more than 21 calendar days at a time continuously, and no more than 90 calendar days in total in an FBT year. So it does actually reset each FBT year. The employee must also return to their normal residence as soon as practicable. So, with the recent floodings, I guess, if you have things like that happen, then of course that's going to throw a spanner in the works, but it doesn't mean that having to extend your stay is going to automatically then create a situation where you're no longer traveling on work. It just means that you still need to try and return as soon as practicable after that situation resolves. And then lastly, the employer needs to obtain and retain the relevant documentation, as is always the way, in order to substantiate the fact that all of those requirements I just went through have actually been satisfied. And I guess as well, just one last point to note, it's these sort of requirements need to be considered for each instance or period of time that the employee is away. So unfortunately, on the one hand, you've got a situation where you could potentially get FBT exemptions, but it does require you to do a bit of, admin and tracking and actively or proactively track these things as it's happening. So, there's always going to be a bit of an admin cost, I guess, to get a good tax outcome. Okay, so the next one is releasing of cars. It's a little bit hard to say that correctly because it sounds like it's a release of cars rather than the releasing of cars. So I'm sure everyone's aware that there's been a huge supply shortage and rising prices with cars in recent months, and employers and employees as a result are increasingly deciding to release their cars before the initial lease period expires, instead of just paying out the residual value to acquire the vehicle at the end of the lease, and that was traditionally the case. So where employers or employees do so, there may be unintended FBT consequences if the vehicle is no longer able to be classified as a fringe benefit, as a car fringe benefit. And a car fringe benefit, if you recall, is actually a concessional category and valuation for fringe benefits purposes. So if you don't satisfy the definition of a car fringe benefit, then the car may then need to be treated as a property or residual fringe benefit, and that will likely result in higher FBT because property and residual fringe benefits do not provide the same concessional treatment for cars as the car fringe benefits rules. So in order for a leased vehicle to be treated as a car fringe benefit, it must be a bona fide lease. And to be bona fide, one of the requirements is that the residual value meets the prescribed minimum value set by the ATO. And these are effectively a deemed market value sort of threshold test. So to assist employers with determining whether or not a released vehicle can be treated as a car fringe benefit, the ATO has made several helpful and clarifying amendments to tax determination 93/142, including a confirmation that the ATO's prescribed minimum lease residual values are calculated based on the total period that the asset is leased for, regardless of whether this consists of a single lease term or multiple lease periods. So if I've lost you a little bit here, at the end of the day, you just need to be aware that this can create an issue if releasing a car means that the car no longer qualifies as a car fringe benefit. So another point to note here is that the ATO has also denounced the use of back-to-back one-year rolling leases that are often promoted by financiers to reduce the residual value of a lease arrangement. And the reason why they kind of get promoted is because you can maximize your tax deductibility of the lease payments. Okay, car parking. Now this one, many of you have probably heard about this, various conversations about the definition or the ATO's interpretation of a commercial parking station. It's been talked about for the last couple of years. We've been waiting for a precise confirmation as to what their interpretation is, and they have finally released it. So they've effectively updated their original interpretation of the term commercial parking station for car parking fringe benefits purposes, and it's been confirmed as the release of this tax ruling 2021/2. So this change in interpretation is due to take effect from 1 April 2022, so for the next FBT, the 2023 FBT year onwards. And the ruling provides a bit of a more broad and potentially harsher interpretation of commercial parking station, or the definition, because it essentially captures or treats shopping centre car parks, hospital car parks and hotels as being commercial parking stations, even though they do actually charge penalty rates to try and discourage people from parking there all day. And so if you remember before, when we were talking about car parking fringe benefits, one of the requirements is that you've got a commercial parking station within a 1 kilometre radius, and that's part of the test as to whether or not a fringe benefit has actually been provided. So you can see that for clients in sort of, quite rural, or not rural, I should say more suburban areas, not in the city metro, I guess, that they may not have had a car parking fringe benefit in the past, but now with this revised interpretation, suddenly if they've got, Westwood Shopping Centre down the road, they might have a car parking fringe benefit. So just another update, even though the ATO's released this tax ruling, as of about a week ago, the government announced that it will be conducting a consultation to identify essentially appropriate modifications to the definition per legislation of commercial parking station. And ultimately what they're getting at is they want to get back to the original or the previously understood interpretation of car parking fringe benefits and when they arise in the context of the commercial parking station requirement. So specifically, car parks that effectively charge penalty rates for all-day parking would not represent genuine alternative parking arrangements for commuters and should not therefore trigger FBT liabilities. So fingers crossed that consultation does go ahead as planned and does result in that outcome, because then we'll have a reversion back to business as it was before in terms of car parking fringe benefits. Lastly, I've just got that case there. So Virgin Australia Airlines versus FCT. So employees in the transportation industry sort of need to be a bit more careful when they're looking at whether or not they provided a car parking fringe benefit to their employees as a result of this recent court case. And so in this court case, the verdict essentially confirmed that a car parking benefit is provided at an employee's primary place of employment. So for employees that are working in the transport industry, their primary place of employment on a given day may be at, the airport terminal that they're departing from, or it could be, that's in the context of a flight member, a flight attendant, I think is the correct term. And equally, if you've got, say, a bus driver departing from a bus depot. So on a given day, they might have different primary places of employment. So you just need to consider that very carefully when you're determining whether or not you've got a car parking fringe benefit that's being provided to those employees. Okay, the next one is in terms of retraining and reskilling staff. So as part of the 2020/2021 federal budget, the government announced new FBT concessions to encourage employers to reskill or retrain staff who have been made redundant or are soon to be made redundant. And under this new exemption, retraining or reskilling benefits that are provided on or after 2 October 2020 are exempt if all the required conditions are satisfied. So essentially, the benefit needs to be provided in respect of training or education undertaken by an actual employee of the employer. It doesn't matter that the training or education may not have a direct connection to the employee's current income earning activities. So it's a little bit of a difference, when we think about whether or not self-education expenses, for example, are deductible for an individual in their personal tax return. It's a different test. And secondly, the employee is redundant and the employer has complied with any Fair Work Act requirements. So even if the employee wasn't actually ultimately made redundant, if the training and reskilling benefit was provided to the employee at a point when the employer thought they were going to have to make the employee redundant, then that still qualifies. And ultimately, the training or education needs to have been provided for the primary purpose of enabling the employee to gain employment in essentially any job or industry. Okay, so one of the big updates this year is essentially increased access to certain small business FBT concessions. So from 1 April 2021, small and medium-sized business employers with an aggregated turnover of less than 50 million, so up from 10 million, can gain access to certain small business entity FBT concessions and exemptions. So this is principally in relation to FBT exemptions for car parking and also the multiple portable electronic devices. So I'm not going to go into any more detail on that. Just be aware that there is a change in that, and there are now, a whole host of employers that can get access to these concessions as a result of that increase in the turnover. Okay, so ATO audit and review activity. It's definitely an ever-growing list of ATO review activities, and it seems like they only add things and not actually ever take anything off the ATO audit sort of hotspot list. But I guess, many of you are probably aware that data matching powers of the ATO it just blows out every single year. It's quite remarkable how much they can match these days and what they can then use that data for in terms of, modeling as to what they expect, your average business to provide in terms of fringe benefits. So just keep that in mind, because it really is a word of warning that employers need to be proactively reviewing the benefits that they may be providing and determining if they have got any exposure. And if you don't know, come and see us, get in touch, we can help. So just on that, the ATO has actually announced a 3-year extension of its data matching program, whereby lifestyle assets, which is boats, fine art, all those fun things, data will be acquired from insurance policies for these assets where the value is equal to or exceeds certain nominated thresholds, and it depends on the category that we're talking about, in order to determine whether an employer is liable for FBT. So that's actually quite an interesting development, because they really are, getting data from all different sources in order to not catch employers out as such, but to fill this FBT gap that they like to talk about a lot. So one of the things that the ATO has really communicated, I guess, this year is that they are increasingly looking at specific tax return labels to determine whether or not an employer may be providing fringe benefits, and then, off the back of that, then whether or not they should actually register for FBT and lodging FBT returns. So there's a whole host of labels that actually can trigger a bit of a red flag in the ATO system. But of course, some of the obvious ones are fringe benefit employee contributions label, contractor and subcontractor data in the tax return, motor vehicle expenses, and interestingly, non-deductible expenses. Now, this actually leads into the next point where I'm talking about entertainment. So I know there's definitely been a trend in the past. Hopefully it's decreasing with time, but there's a lot of employers out there, and possibly even some tax agents, that simply think that if you don't claim a deduction for entertainment and you forego that deduction, that you've resolved you've excluded yourself from any FBT liability, and so you don't have to worry about it. The ATO won't come knocking. Unfortunately, that's not the case. So on the one hand, yes, you've done well not to claim entertainment as a deduction because you're not entitled to it because you haven't paid any FBT. But on the other hand, you still haven't dealt with the FBT exposure and potentially, paying FBT to the ATO. So just be really careful with that one. And I guess, in a more granular detail sense, there are specific accounts, when you're looking at a set of financials that seem to have a lot of entertainment hiding in them. So, one that comes to mind is employee amenities. That seems to be a bit of a dumping ground quite a lot of the time for weird and wonderful entertainment benefits. So again, if you're an accountant or a tax agent, make sure you are reviewing the client's financials and their data to help them identify if they do have an entertainment exposure or equally any other fringe benefits exposure. Okay, so vehicles. Employers seem to assume, not everyone, but seem to assume that non-cars are automatically exempt. So I've just put that in bold there because it is something, again, that the ATO have said that they are targeting actively. So just be really careful with that. If you remember back to earlier in the presentation today, just because you haven't got a car doesn't mean you haven't, provided any fringe benefit. You might still have a residual or property fringe benefit, but generally it's a residual fringe benefit. Car fringe benefits. So this is another interesting one. So incorrectly using the data in your financial statements or your accounting and tax asset schedules to value your car fringe benefits. So when you're looking at the statutory formula method or the logbook, the operating cost method for car fringe benefits purposes, your starting point is what is the base value of the car, and there'll be, depending on which method you use, you'll have potentially two different numbers that you're starting with. And so to go and refer to your written down values in your accounting or your tax asset ledgers is never going to be the right starting point because quite simply they're calculated differently. So just ensure that you are actively maintaining those cost bases for FBT purposes and not referring to the written down value in your accounts as your starting point. Another thing as well is that employee declarations seem to be something that people forget or employers forget to actually obtain. So I had the conversation with the employee and say, hey, we need you to provide a declaration saying that, this benefit is going to be otherwise deductible or that you haven't got any private use, etc. But they don't necessarily follow through and ever get that documentation from the employee. So we definitely encourage employers to, as much as possible, prepare template declarations, provide those to the employee, and obviously they need to fill out and they need to confirm that everything is correct. But give them the opportunity to, I guess, make your life easy and make their life easy by just putting all the information in front of them, and then they can fill it out for you and return it. Because that's you've got to have your declarations on file. That's definitely one thing that a lot of employers fall over on. And then when you have an ATO review or an ATO audit, it can get you into a lot of hot water pretty quickly, because a lot of those declarations are actually required in order to access certain concessions and exemptions and reductions of taxable book values. So they are really important. If anyone's not sure what sort of declarations you need, the ATO has actually got a really good sort of landing page in terms of declarations that you need and also some sort of templates. But equally, if you guys need any help, then just reach out to us and we can assist. And another point to note, and this one's one of my favorites. So again, a little bit like the scenario before, I was talking about not claiming entertainment deductions for tax and thinking that you're all clear. There's certainly a number of employers out there that think that if they don't lodge an FBT return, that they don't have any FBT exposure. So I guess with this one, just remember that, not doing something doesn't mean that you've escaped your risk. You might fly under the radar for a while, but with this ATO data matching powers, ever increasing, it's only really a matter of time before you're probably going to get caught. The other thing to note is if you lodge an FBT return and you do your best, obviously, to capture all the FBT liabilities and benefits provided, then you've essentially locked in a period of review or a, amendment by the ATO, because you've actually lodged something with the ATO. If you never lodge anything, then you potentially could be under review or under ATO scrutiny indefinitely. Okay, so oops, I've just got those squished on the bottom of that. So that brings us to the end of today's FBT session. So I hope you guys learned something. I'm sorry if I've rushed through it a little bit, but if you did have any questions, like I said at the beginning, please feel free to send through any questions. I'll just go back to the beginning so my email can pop up there. Oh, actually, sorry, they're going to put the slides up for you guys, so you'll be able to get my email address and contact details if you did need them. So thank you all very much for attending, and I'll talk to you later.